Dio and the Arcane Bear. It's good to be here again. Another wonderful day in the Costa Rican jungle. The markets have been particularly red over the last 48 hours, and this is always a good time to go over more market conjecture. Yay, everyone loves when things go up. When things seem to go down, you hear words like manipulation stream into the market consciousness. And what I want to do today is go over some pretty nice fundamentals alongside our technicals, which is obviously our leading indicator. Monetary data scientists, as I like to say. But for now, we'll start on the technicals. So Bitcoin, yes, nice big red candle day right into the center of our backup phase. We've gone over this briefly. And in the private group today on one of our webinars, Blue and I were making conjecture, and I wanted to go over that because I thought it was poignant for today. Number one is this more likely the buying climax up here to a much larger trading range? And we've seen indications of this coming from the earlier bull market of 2017. So we'll go over it because we were expecting that we would get a return to somewhere around this backup phase. But part of the question now is this the buying climax? And then you have almost a fractal version of here. Here is your primary support. Here's your buying climax. Here's your primary support. Here's your buying climax. So nothing has changed in the overall sentiments yet, but these are always great times to double down on study. So one of the nice factors that we can go over right now, well, probably go to the 4 hour, make it a little clearer here. Here's the 4 hour, and as we can see, the shakeout is unique, and what's fun is actually giving us a bunch of new data. First off, I do not believe the bull market is over. I just believe this is a secondary accumulation. If it were to change, if we get clear closes below the box, that's a different story. So this area of supply that we're witnessing down here is extremely powerful. This is a lot of supply that came into the market. We also have an equivalent amount of supply that came into the market back here from the previous buying climax and the first shakeout. So it's starting to look like, to me, that this is just a secondary shakeout of the market space. Now, we always want to look for our next movement in the market, which is the automatic reaction. So back here, you can see we went from our primary support, our buying climax, our shakeout, and then we had our first automatic reactions that took us into a level of resistance that ran, I guess, diagonal or kitty corner, something like this we used to say, to the horizontal trend lines itself. We've seen this in other smaller trading ranges, but here in the $30,000 to $43,000 range, it was quite predominant. So I want to go over something called scale invariance today. I know a lot of you like joining this channel because of the eclecticness. Some of you who are fans of Randall Carlson will probably have already heard the term scale invariance and know exactly what I'm talking about. But I want to show you this as the nature of fractals and storytelling through fractals. To begin with. So scale invariance. This is a unique term that basically shows the nature of fractals. For instance, if you look at the shape of your lungs and then look at the way the trees, branches and leaves grow together, you do find a lot of similarities, and this is what is commonly known as scale invariance, and it shows the fractal process. Here you can show the Wiener process is a scale invariant, or the Wiener, I'm assuming, is what it is. We can open this up here and zoom in, and you can see the nature of what looks to be a market cycle coming at you from multiple angles. And what again is important to recognize, and the reason why I'm bringing up scale invariance is because often what we hear and what we see coming from the market's whispers is these changes of sentiment, but these key cornerstones of each market sentiment move. So here where we are measuring the buying climax, I thought would be a thinner backup range, could very easily be now the primary support and the backup of a larger trading range, very similar to what we had here and here. Now, the reason this becomes a relevant conversation, and I think scale invariance is so important, is to understand that if we go into the 15-minute, one of our private members, Puff, I think that's how you say his name, shared a really nice chart of the rounded top and some of the dynamics that went into this much smaller area of a trading range. We don't normally go over these smaller areas with you guys, but I wanted to point this out because, again, it was a very potent aspect of this conversation, which, again, scale invariance is the fractal nature of these trading ranges. So here on the 15-minute, you can kind of see how the top developed. and it was this beautiful area of distribution. We had a failed upthrust, and it was actually quite noticeable here, the amount of supply that it took to go up and how high we went up. So here, this amount of effort or this amount of supply created this result. Here, similar effort, similar supply, significantly diminished result. This is usually what the top of an upthrust after a UTAD or a sign of strength failure turns into distribution itself. And here you can see what distribution looked like on the 15-minute. Again, where you had a break below the trading range and then a move right back up to the top with the inability to close above the range. So right now, a big part of the question that we want to see here is on this scale invariant nature, which is now that we're looking at it on the 4-hour, a much more kind of reliable time frame for understanding the market cycle macro, is that, look, we haven't closed below the bottom of this trading range, and unless we close below that, I'm not worried, because again, if we look at the 15-minute, these clear areas of distribution are when you drop below the trading range that you're in and then cannot close back above it. A lot of weak hands get shaken out in these drawdowns, but this is the area ultimately where you're like, okay, I'm done with this position. And this kind of brings us to other areas like Ethereum, which is another great market cycle indicator and a great place for us to study right now. As you can see, I've already adjusted my backup phase to have a similar nature to Bitcoin. You can see the Jesse Livermore pattern, kind of where we originally were charting certain areas of Bitcoin and Ethereum. Back in the previous months. For those of you that have been with us that long, you'll recognize this kind of Livermore breakout pattern. And where we are, I think it was around 0.8, something like this. Again, this is just another kind of function of scale and variance and patterns. Look at the nature of fractal mathematics as a scale invariant itself, and the things that we are charting in breakouts and returns to kind of return to normal. So here we have a clear breakout of that pattern. We are above the normal range here, which is around 1400. We've come and touched right back from Ethereum into this previous trading range. So we'll remove this because I think it adds some noise, and we'll look at this as primary trading range number 1, and then here is the trading range number 2. So currently we've broken below the primary support area, and this is what would become another sign, a shakeout, and very similar to what we had here. We have this primary support that came in here. You had the buying climax that came in here. Okay, primary support, buying climax. Okay, you have these two similar qualities. And again, remembering the overarching essence of what we're trying to remember and focus on is the scale invariant or fractal nature of charting, especially as we go in and out of small time frames and look more effectively at the macro time scale, because again, we want to know, is the bull market over? That's really the biggest indicator, or is this just another cycle threshold? I do believe it is just another cycle threshold. It is not the market indicating itself being over. This is kind of highlighted in a few different ways. Although we did break below that nice channel support that we had been rising up in Ethereum for quite some time, this nice effective rising channel. Now there's a few ways you could look at it. You could look at it as we tried to close above that channel too and couldn't do it on this lower, on a kind of a lower spectrum. But more importantly, it's actually these horizontal areas that are the areas of focus at this moment. So we're in our SOS. We've had our primary support. Again, we've had our primary support and then our buying climax. And again, just a second, double down here. Here's our buying climax at the top of this SOS. And here's the first shakeout, which we're witnessing, I believe, now on this new trading range. Now, if we start to see big closes like this, again, remember how we were looking at the 15-minute on Bitcoin, and we saw a close below and then tried to get back in and couldn't re-enter this trading range. Well, then, damn, we might have to say game over to some degree, and it would be just, I think, effectively on this larger spectrum, because as we scroll out again, we keep in mind that scale and variance is totally possible. It is actually a matter of function of the universe itself. Again, maybe going deeper into this idea of scale and variance, what this kind of looks like on a like a side-by-side or relevant conversation. I should hope that they have photos of leaves and trees. Yeah, it's mostly fractal in nature. I can't believe they don't have like these photos. Photos are like a pretty clear one. These are all like mathematics photos, not what I was hoping for at that moment. Let's see. Okay, this is kind of These are not so bad. Yeah, here's a nice kind of fractal rendition of how we see nature as a changing function of form and scale, especially if you were to think about how the creeks roll off of a mountain. Photos of mountains. Let's see if that one does a better job. Okay, yeah, so I probably should have added a few more photos to the list for this idea before I just opened it up, because it is such fractal in nature. It's mostly mathematical diagrams, which is not as visually effective, I don't think, but I believe most of you understand the idea here, that as you zoom into something, your lungs and the way your bronchi kind of offshoot and the alveoli look almost identical to the way the trees and branches turn into leaves effectively. So we see these relationships, and even in here, as we look at scale and variance, we see a very clear 1, 2, 3, 4, 5 pattern, which is an Elliott wave theory as well. So part of the question is, are we actually witnessing maybe a bigger stepping stone in terms of a trading range? And this is very possible, right? But right now, because we're on the 4-hour, we want to keep a close eye on this final trading range, because even if it does break down, we could make the argument, and this is the difficult part about these next phases, that this was a primary support and this was a buying climax for one big trading range. And given how early we are in this ecosystem, it's not out of the ballpark yet to see like a multiple function where you go close up, you come back down, you reaccumulate after, like a reaccumulation after decline, not too dissimilar to how we saw in the past, before continuing further down this path. So overall, I don't think the bull market is over yet. Even if we do see a close here, this would likely to me just signal a much larger trading range, and probably a longer winded bull market as well, which is a bit more of a abstraction in the conversation. You never want to get too far ahead of yourself in market cycle study. We know that the tops become explosive, but I think what is good to do right now is to go back and share the relationship, I think, in Bitcoin's market cycle of 2017, and the relationship that we saw to the trading ranges before the final blow off top came in around 20 grand. There was around 3,000 and 6,000 where you had noticeably deep and volatile trading ranges where the supply range was tested quite heavily, and that could be exactly what we're witnessing now. So personally, my educated assertion here is still bullish. Yeah, here is the nice some of the previous trading ranges we were studying back here in May and June. For those of you that didn't join, but now you have, I'm sure you've got a clear view of what Bitcoin looked like as a reaccumulation pattern before it jumped across our creek here. This was such a beautiful play, and the backup phase right to the top of the horizontal trading range. A lot of you are late and didn't get to enjoy this part with us, but just remember that this is not the only time that a bull market is around. So we'll just keep going back. We'll look at 2017 here. Okay, so let's go back a little further, my bad. So right now I'm using the area chart, and what I want to do is focus in on two pretty key points. It doesn't give me enough data on this one. Really? That can't be the case. This is Binance. Oh, okay. Yeah, it does actually stop in 2017 pretty much, or start in 2017. Which one were we charting in then? Yeah, here we go. Okay. Okay, so we already went over one of the previous nice reaccumulation range back when we were at 9 grand. That was a beautiful, beautiful play, but it's these two kind of ones I've got already highlighted in purple that I want to make a conjecture with, because the market here threw out some really heavy cycles back in 2017. I think my internet is going pretty atrociously slow right now.
Okay.
Let's make sure the YouTube video is not playing in the background. That sometimes will Dusseldorf it. Okay, so a little bit of a longer video today. The conjecture is quite high, or like thinking process is quite high. So here we go. Back around 2,500. Yeah, so let me delete this one because it can be deceiving in terms of what we're going to do for context. So you had three ranges that were extremely volatile while leaving the trading range back in 2017. So if we zoom out, you can see the previous trading range in Bitcoin. Maybe I'll start out on the daily here to give it a bit clear. It was a beautiful cup and handle. I think you can probably find those videos. because they were right in the start of 2017. But some of my very first videos, I talk about a nice cup and handle forming on a multi-year time frame for Bitcoin. That's one of the reasons why I started to jump back quite heavy in August 2016, 2017, or the lead into 2017. But here you have this first big gap up and this second big gap up. This type of volatility ranging in the 30 to 40% was very, very noticeable. And the supply range at that time was actually quite high as well. We didn't see any other supply checks come in that high until much, much later on, like December, as in compared to the September that we were there. So like at least 3 to 4 months after. So I believe what we're witnessing right now are these big, much bigger trading ranges outside of the box here. From the trading range to the top, we were at 170 and around 360. So if we take any type of similar function, we go back at Bitcoin here, and the log chart will work quite nice for this stuff too. I do like the log chart for stuff like this, but I want to make a more linear assumption at the moment. Not always a good thing to do at time, especially when we're talking about scale and fractal and variance. But what I think we're witnessing is a very big similarity where here you have a big supply check test number 1, and then secondarily a big supply check test number 2 coming in. And that's what we saw back in 2017. First off, you had a nice horizontal trading range, and then these big kind of final supply checks before it went absolutely parabolic. So note, nice trading, 2 horizontal trading ranges coming out of the finality of the trading range back in 2017 into 2018. And then here where we are now, a very similar pattern has occurred. Here we had 1, 2 small trading ranges coming out of the backup phase, and then now 2 big supply tests as miners, everyone tries to double down on profits. You can see that ecosystem getting scared. Like as we look into Aave and Avalanche more, we can see that there was a start of a much bigger pattern. And this is where, again, scale and variance comes into play. Is, oh crap, okay, well dang, yeah, this can actually be a primary support as well. So first off, I guess before we get too far away from Bitcoin, recognize that anything outside of Bitcoin is volatile. Bitcoin is volatile. So when we're playing in the venture capital sector, these types of moves are extremely normal. For Aave, what are you down? 40% on Aave from the trading range. And Aave had some really nice characteristics that were showing us, I think, very clear distribution as well. But let's finish with Bitcoin. Because Bitcoin is our collateral layer, I believe effectively what we're witnessing is a very similar play out to 2017. You had your first 2 kind of smaller trading ranges where people really pushed into positions, and then you started to get more and more retail, and in this case, more and more institutional money showing up and having FOMO. You know, I had a good conversation where, okay, well, is Tesla buying Bitcoin the top? And it's probably not. It's probably a signal to other larger market players to continue to play the game with them as well. So I think we're going to have a final supply check test here, not too dissimilar to this previous supply test that we saw, and then we're going to have our kind of amazing breakout price structure. But again, when we get into the minutia or the smaller time frames of each of these trades, we can see the importance of these trading ranges, specifically this trading range that we're about to form now. Again, if we go to the Hike and Ashy charts, we see a much clearer wick almost all the way to the bottom of this range. So we're still in a healthy environment for Bitcoin. The only thing that was a little concerning was back here. We saw more supply come into the market in this trading range, and create less of a result. But now on the daily, we can see that this is a huge wick on the Hike and Ashy chart as well. So it's not until you get to the 6 hour that you can make a little bit of a clearer comparison of the volume characteristics for this shakeout versus this shakeout from our buying climax. So again, buying climax, shakeout, buying climax, shakeout. Look at the supply here, and then look at the result. And so for those of you that are new to the channel, effort versus result, here is the result, approximately a 26% spread by this here, this amount of supply. Here, this amount of supply created this price spread, so this result, at a little bit of a higher gamma than the other, which, let's see, approximately here. And take that. around 25%. So almost equivalent. So this is the an important part to always check. Right now on the 6 hour, we can see that these two areas of supply, the amount of effort coming in, yielded almost the same amount of result as here and here. So I believe, again, what we're witnessing is a fractal scale and variance feature between the buying climax, the primary support. Here's a primary support, and here's our buying climax. So I was a little thin on thinking the trading range was here, and the primary support was here, and buying climax was here. Again, you got to, when we're thinking about fractal mathematics and talking about human nature and psychology, underlying waves of emotion that hit like the antennas of brain goo, it's a very complex philosophical, I think, conversation that gets very easily colored in charts and technical analysis, and that's why it's difficult to be good at it, because you have to be fairly multidisciplined to get a good grasp on it. That's why people like Jim Simmons hired some of the world's best scientists, people that could potentially win Nobel Prizes, to help them make a lot more money, because you're dealing with a fairly systematic function of the way things work. So again, I think what we're witnessing is just a fractal, larger trading range. In the other players, it's clear to see that these shakeouts have done some damage here. Again, Avalanche has dipped into a spring, and we've kind of gone over some of this stuff before, but let's make another further outlook here. Here is a reaccumulation schematic 3, where you do have the spring moving quite a bit below the trading range, and again, we've seen this. The spring now has moved below the primary trading range, or the primary support we have back here, and our buying climax here with our first big shakeout here. So this, I incorrectly labeled this. There's another way to look at that as two trading ranges, and we've gone over these as well, which is the reaccumulation after decline. But based off what we've seen from Bitcoin, I believe that these are just much larger gap trading ranges, where you're talking about 30 to 40%. Here with Avalanche, you're looking at approximately 40 to 50%, just bigger volatility sweeps. The same thing could even be said about Link, although this is where the markets start to worry me a little bit, is when I go and deep dive with tech team about GRT. And just first off, ladies and gentlemen, I want you to all congratulate yourselves on showing up here, because when we look at things like GRT or Link or Aave or Avalanche, you have the opportunity and the privilege of doing something that other generations have not had the advantage of doing, which is find a way to play in the venture capital sector. There's enormous amounts of money that can be made in the venture capital sector. And back in the day, like 10 years ago, like that's so long ago, to be able to play in early seed stage of Twitter and get $10,000 in their like primary equity raises was not something you had at your fingertips. And although I don't like the ICO space, I think that there's a lot of scams that are created. What I have always been excited about is that these services represent a new opportunity for financial investors to potentially get in on the early entry from anywhere around in the world with a less friction example. So there are problems to how that goes, because the stove is hot and you can get burned. So be careful with how much you invest in the venture capital sector, but it can pay off astronomically. The other thing that's important to remember is that if you had made a bunch of money from Twitter in the early days, you would have never been able to have exited that position, even though Twitter may have had a theoretical market cap of $1 billion. You would have had to have found a private, accredited investor to buy your private equity share of Twitter off, and you couldn't have sold it until they went public, basically. And these are some extreme features that this space doesn't have. GRT launched, it raised a bunch of money, it's got a protocol potential future. It's not necessarily functioning in the way that it should yet. There's got an $18 billion market cap. Are they really worth $18 billion? Like at this point, probably not. All the liquid supply is not even on the market yet. What happens if that liquid supply were to hit the market? Are people going to recognize that in this venture capital sector, you're also comp man? So the people who took early stage investments in GRT and bought a bunch of it now have all this new capital. They can run the price pretty much in the ground, right? That's what happens when you have a lot of liquid supply on the market still, is you can just sell it all. But now you have new operators. You have people recognizing for the first time that they're on both sides of the trade. Well, if they want their evaluation to stay the same, they can't sell it all at once. And this is one of the conversations around Ripple, and are they as a security raising money to fund their company? And what about all these other things that are doing something similar? How do we regulate these conversations that's not written in 1930s vagary around how value is transferred when you have a world of NFTs that are exploding? So I think more than price action right now, because this could be a spring 24 hours from now, I'm really going to want to see, do we get up here and cannot close above these trading ranges? Because that's going to be a big indicator, I think, for Bitcoin as well. And if we can't get back above these trading ranges in multiple areas, it could signal a much bigger market cycle down. I don't believe that's the case. Both in Ethereum and specifically in Bitcoin, it looks very healthy right now. We're not back down at the bottom of the trading range. So it's just a game of patience at the moment. And more importantly, a game of excitement. Understand that you didn't need to put hundreds of thousands of dollars into GRT. It could just been a few, like $50. Not financial advice, but small amounts of money over a long period of time in the venture capital sector can yield massive results. I wanted to share something that one of our private, Private Bear members that helps us write content, do the webinars, Baloo. Big shout out to our boy Baloo. He shared this quote between Jeff Bezos and Warren Buffett that I quite liked. It says, Jeff Bezos, speaking of Warren Buffett, he says, Warren, your investing strategy is so simple. Why doesn't everyone just copy you? And he says, because nobody wants to get rich slowly. And this is a prime example to understand that these ideas of venture capital, waiting 5 to 10 years before you could ever make an exit, maybe even longer, is a slow way to become wealthy, but it works. So keep that in mind. Be excited about the fact that these types of venture capital plays you could have never entered into before. It's just a unique opportunity. Understand that in venture capital, you're always trying to limit how much you put in, knowing that these things are extremely volatile, knowing that it could be worth 1,000 times more or or nothing. Right. So it's a really important game plan and function for here. I really appreciate your guys' support today. Give us the thumbs up if you like this content. I'll probably spend a few minutes going over chat right now. My phone is just blowing up, apparently. Someone's got something they want to say. Let's see here. It better be important. Maybe they're trying to tell me something about the stream. Oh, okay, yeah. There we go. So everything's going smoothly. So this is the community chat function. I'm going to go over and readdress my screen here for a second. I'll take a look at the chat, and we're going to answer some of your guys' thoughts and questions, and maybe take just a little bit of a moment to raise some flags or thoughts around what you guys are interested in. So that's what we'll do now. Let's see here. Ryan V says, a month or two now, everybody will be bitching they didn't buy more. Very likely, in my opinion, this is just another market cycle reaccumulation range. Yeah, the other thing, guys, I want to recommend is that if you're new to investing, you really start to learn how to think in forms of like decades. Because unless you can think on long term and understand that the reason why we're showing you quotes between two of the world's richest faces is because this idea of getting rich slowly is how you win without getting lucky. And you can get lucky, and you can make some pretty amazing home runs, especially in this venture capital sector with very small amounts of money. But understanding that this gets done frequently by lots of people, and we are all getting better at it. It's a pretty simple strategy. Find things that are undervalued and invest in them, but be very conscious around the chances of being right, and getting lucky on like by accident, and then getting there on purpose are vastly different forms of a function that can appear incredibly similar. You can have a horrible strategy that pays off well, and you make a bunch of money with a horrible strategy. But I would rather have a really good strategy that didn't pay off that one time, because it's just a better function and form of the character that you want to build, which is getting wealthy over the course of your lifetime instead of just in a weekend. So be cautious about like making your first few steps as a new investor, because remember, you're joining a channel right now where we've been invested in the crypto space for quite some time. But more importantly, if you go back and watch all of our previous videos, we started to scream bull market right around here. around June. Now, the spring was a huge learning moment, the pandemic, but clearly this June, this first horizontal trading range that we took, I could probably find and go over that video. It'd probably be fun to do. I'd be like, guys, looks like the perfect reaccumulation channel. Look at it. We're going up. We hit resistance. I remember being super stoked. Like, we hit resistance. We come back down. We're below the creek here. A lot of you who are studying will know what this means. Like, we saw an SOS, the backup phase right to the top of the channel. We stayed above the top of the channel, and in a reaccumulation after decline for secondary notes. But we've been here for a while already, so the fact that we're all really high up, and some of you are like, I just bought my first Bitcoin like last night right before it dropped, like, clearly that's a sign that we are in the middle of the bull market, because retail does not show up like they should way back here. You guys who are new, you all show up way fucking over here, like, you want to buy Bitcoin at $3 grand? You're like, nah. $4 grand? Nah. 5? Nah. 7? Nah. 20? Nah. 30? Meh, 40? Okay, I'll buy Bitcoin now at 40 grand. That's, for some reason, retail, and I think I've categorized this as human nature. Generally, you as an individual are not going to go look for a partner who's like dragging down along the bottom and be like, yeah, this person's got like a lot of future potential. I'm totally going to invest in them while they're like partially doing drugs on the side of the road or something like this. So instead, what you do is you wait till they're famous fucking artists and they don't care about you anymore, because you ditched them when they were living on the street, and you try to buy into them then, before they had a relapse or some shit and end up back on the bottom when you want to be investing in them again when they're at their bottom. Your human nature doesn't allow you to do that very easily. And it's important to recognize that because you are a human, one of the things that gets in your way is your human nature, to understand that the reason why a lot of new investors show up is because they're looking for partners that are on the up and up. They're looking for ideas that are moving up. They recognize the value as the price is going up. There's a relationship for it to most people about how we perceive value, versus I want to get my hands on that like street artist girl way back here, which is like hitting her lowest low. That's like my jam right here. Like, let's get in near this, yeah, right before it explodes and becomes this huge sensational thing. Anyways, hopefully that was fun for you guys. It's always fun for me. I love doing these videos. We never know where we're going to go. Again, it just looks like a new trading range to me, very similar to what we saw in 2017. If we start to see clear closes below the range, okay, I'll change my sentiment. But generally, it took a long time to get here. I don't think it's over yet. I think this is just another big stepping stone along the way to a much higher price range. Fundamentally speaking, you have the world's biggest funds getting in. It may not even be a totally retail play yet. A lot of retail is looking at things like Ethereum. I think the volatility we saw in Ethereum and a bunch of the other sector right now is just a show of hands that there is a lot of retail here. And more importantly, scale and variance, guys. I think, we often spend a lot of time out here on the 4 to 6 hour, but you can go in and learn something super fascinating by looking at the 15-minute on Bitcoin and going, oh, look, there's this clear distribution range on the smaller time frame. So now what we're going to be witnessing here is this an accumulation range at the bottom of the time frame, because this was clearly a distribution, especially here when we couldn't close back above 54. But again, this is on the 15-minute. So how relevant is it to us on the fact that we built this story coming on the day based off of these much longer time frames and with a much longer time frame in mind? I believe this is, again, just one of these final stepping stones before we go boom, 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 and then just kind of melt people's faces, get the last few schmucks to buy Bitcoin from us up at $280,000 before it drops back down to 80, and the whole game of retail hot potato starts over again. Anyways, Tune with the Arcane Bear, thank you all for joining us today. Another fantastic episode. I know you guys always like me to play music at the end of these things. I don't know if I have one of the instruments that's in tune right now, but if you want, what you can do is you can go to Instagram.com/Arcane Bear. You can follow me there. And if you like when I play music, I do silly things like post videos of me playing music there. So if you'll notice, I just found out that there's a group called The Weekend, and I love playing drums. So you can go watch me smash the shit out of some drums. Does play audio? Yeah, here we go. Anyways, that's that. Stu with the Arcane Bear. Thank you guys all for joining us today. That was me playing. Oh, you didn't even get to see the video, did you? Hold on. I should backtrack. It's fun. Let's go back. Follow me on Instagram. You'd think I'd be good at this by now, right? Like, there's only 4 or 5 buttons I have to press to go to Instagram. Like this, and then I press the Instagram thing. There it is. Yay. Yay. Tio's learning. Thank you guys all for joining my learning process. Absolutely fascinating. Oh, yeah, here, look. On Instagram, I take photos of people, and I'll play the drums every now and then. So if you want to watch me play more music instead of just always look at charts, I'll do that in the background too. Okay, that's it. We'll see you on the next